Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the kind of just a mixed alts day that we're having. While we've been having this basically just consolidation of Bitcoin, almost 2 months going sideways, practically the same price around $16,000. And, guys, I mean, these days it's not really the time to be a hero or anything. I hope you guys are all having a, Merry Christmas and Happy Holidays, whatever you guys may be celebrating, as well as surviving the bear market. But taking time for friends and family as well. We do have to remember this time of year that money is important, but your real life is much more important. Obviously, not everything is going to be about these charts. It's not all going to be about crypto or your investments. So just make sure to take, in the symbolic moment of the new year and these kind of family get-togethers that we have, take it to heart. Kind of just assess the lessons that you've learned over the last year or so, and decide on some actions that you need to take to bring yourself to a better spot in 2023. We should be continuously improving and try to keep a ledger or something where you can have notes about what type of setbacks you may have had, what failures, where you could improve, different things like that, and just remind yourself of it a few times so that you can better position yourself going forward, especially well, if you're still following the market despite this 1 year of a bear market, and if you have cash on hand, you're probably going to make it. You're in a good spot compared to most people, which means that those lessons are going to be really important. You're going to be able to buy basically the bottom of the stock market and the crypto market. You can get anything that you'd like. The name of the game right now, however, is preserving your capital. So just remember that as we enter into 2023, you don't really have to be taking any unnecessary expenditures, whether it's DCAing in or whatnot, or even just going on some type of a luxury cruise, these sort of things. 2023 might be kind of a tight year globally in the economic markets. And so, again, just preserve that capital, and when the market proves it to us that it's starting to turn around, that's going to be the time to enter. Again, you guys don't have to be heroes, right? You don't have to buy the absolute Pico bottom. I mean, we may have already bottomed, but you guys don't need to just throw everything in at a certain price level until you have that proof of bullishness. So no unnecessary gambles, and try to save as much money as you can. Don't be wasting money this year on frivolous things. Okay, the past was the time for the free liquidity and all those stimulus checks, all that money being pumped into the system with the Fed just printing money and banks just giving 0% loans. That time is gone. Going forward for the next couple years, it might be a little bit tighter. And so you're going to want to just understand that every dollar that you can collect has a lot more value in its potential than when we were at the top of the market, when everything could collapse, right? Now that we're at the bottom, or we're still on our way to the bottom, that dollar is going to go a lot further. And you may also want to just have it in case something crazy happens in the world. But either way, whether good things happen or just some more bad things happen, you're going to be glad that you have some cash on hand and that you saved that capital, as opposed to just burning through it the way that people have been doing for the last, almost 20 years now, right? So, guys, just to try to imagine, how great 2024 or 2025 is going to be at the top of the market, right? When you've bought the bottom of the market in 2023, okay? So, I just wanted to put out those happy holidays and wish you guys a happy new year. But let's go ahead and just take a look at the charts here because there are some interesting things just to analyze. As you can see, altcoins are pumping a bit, and that can give a bit of an indicator that something might be up, okay? So usually we see this type of a movement when either Bitcoin is about to nosedive and the kind of pump and dump, guys are trying to take a little bit of profit off the top before the nosedive, or when Bitcoin is about to just pump. And so, there are kind of front runners in the market that try to get in on it and try to get that move before retail gets in. And so it is nice to see that this isn't just flat, that there is a little bit of life going in here. And 7% moves, that's not terrible, right? We even see good old lunch over here with a 21% move. I don't know what XCN is, but it's down 30. So there is some life to this market. Things aren't as dead as it may appear, but you do have to be very careful. And again, you don't have to be heroes. You don't have to, be throwing too much money at this market right now. The overall economy has not proven to us that it's ready to turn around. As you can see, we do have a Christmas holiday this Monday. So basically, nothing is going on. Tomorrow, we'll be back in business, and we will get a little bit of a home price data. Looking at the Bitcoin chart, you can see that we do have this just stretch of time, which let me take a measure here. Yeah, basically 49 days of the same exact price. So it's been quite boring, especially the last couple weeks. It's basically just been a flat line. And people might start saying, oh, crypto's dead, that sort of thing. But just remember, this is a consolidation phase. And whenever we have consolidation, suddenly we have a like just crazy pop up, right? Or a crazy smash down. So be on your guard. This thing can't go sideways forever. It will eventually just pop one way or another. And if we zoom in, we can see, this kind of heartbeat chart here, and it is slowly rising. So that is something to notice. It is slowly rising. It doesn't look too abusive or anything. There does look like there could be some liquidity to grab up here. This also looks like a BART that it could try to touch back down. We do have some liquidity down here that could be grabbed, and we are in the middle of this range. So just to help you guys visualize what we're looking at right now, let's zoom out here. And you can see I have my support and resistance and also my CME gap lines on here. If you just want to take an idea of where I think the different levels are that we could be exploring, either to the upside or to the downside. But, if I just go ahead and build some structure on top of this, let's take a look first at this wedge that we've been looking at for several episodes. And I did put a midline through it, and I'm going to show you the significance of this midline. Let me take off most of that junk and just put on the wedge itself with its midline there. And you can see that this midline on the wedge that we're carving out, this isn't imaginary, okay? Let me get the brush tool, and you can see how we can be suppressed under that line quite good, right? But if we do get over it, we get a nice pop, right? We get a nice pop off of that. We get suppressed under it, but we can get a nice pop, okay? I mean, this one didn't really do the job, but neither did this one. This one didn't explore the top until the next pop. So are we getting something like that where we're exploring the underside of this midline? And if we can get above it, could we get a nice pop up here to 19,000 perhaps? Well, maybe. So that's something to be looking out for. We really have gone from the bottom of this wedge to the top, right? To the bottom. And now are we finding our way back to the top of the wedge again? It could take some time, but I think that we're still in that direction. And just right now, we're just suppressed underneath the midline of that wedge. So let me get rid of some of these drawings. And we can just think about that just a little bit more, where there's also the possibility that we could get, sucked into some of this kind of chop that just ends up on the underside. So if we do see a little bit of a rejection here around 17,200, we can expect maybe we're going to get a little bit more chop before perhaps trying again and then ultimately getting smashed back down. Why do I think that we're going to get smashed back down? Well, normally when you see this type of wedge, then you can say that there usually is about five, legs on it. So one, two, three, right? If we do make it all the way back to the top of this wedge, and then there should be four, it often comes with a fake out to the downside. So whether that ends up being 10,000 or 12,000 or 8,000 or something just really terrifying, right? Who knows? But anyway, eventually you find your way back up, and you may just explore that a bit, maybe put in a bit of a bit of a cup and handle here, right? And then you end up breaking out to the upside, and that's how these falling wedges tend to go 70% of the time. Now, that does mean 30% of the time that they fail, but given that this is a macro structure, I would say that we're just running out of room to go to the downside unless Bitcoin goes to actually zero, in which case you'd probably just want to buy more, right? I mean, unless they've outlawed Bitcoin, the lower that it goes, the more you'd probably want to buy it. So, hey, go for it. Bitcoin go to zero. That'd be great for us all because we're paying attention to these things, and other people aren't even going to notice it. So. I would say anything under 14,000, anything under 15,000 starts to look really good. And if we ever get a chance to buy anything under 12,000, 13,000, that would be probably amazing. Now, we do have these CME gaps down here around 11,000 and also around 9,000. And so if we do have a flash wick to the downside as we're, maybe traversing this path, then just freaking people out and then finding our way back in here, getting above that midline, breaking out, maybe even retesting that, and then going forward there, building in a higher low. That would be an interesting macro bottom to put in there, right? And so this is something that I would be looking for. If we do get rejected in this 18, 19, $20,000 area, if we aren't able to get over $20,000, I would expect us to really break down and just explore some fairly extreme lows. Now, if we are able to break to the upside and just surprise the market, then I could see us, doing a fake out to the upside, maybe 20,000, maybe 25,000. I could even see us going as high as 30 to 33,000 before ultimately finding our way back down sometime next year and making that real new low. So either the low, the real macro low is going to be coming, let's say in the first quarter of 2023, or something's going to be interfering with the market that just puts in a little bit of a stimulus that pumps us for part of the next year. Maybe the stock market is just over bearish, and so it has to have a little bit of a drive to the upside. That could drive crypto up. And then ultimately, after maybe double topping or having a lower high on the stock market, then it just dumps to a new low itself, depending on what's going on in the world. Perhaps even if the economic recession is deeper than what people expect. So I do expect Bitcoin not to follow the stock market as high as the stock market could go. The stock market is, something that's very interesting. It's very flexible in how it can do a double top even in a downturn. But the thing about Bitcoin is it already did its double top, okay? So we might be waiting for the stock market to do something similar to this before ultimately coming to the stock market's low. If we think about the stock market, basically what the stock market has done is it's had its first drive up, it's had a pullback like this, and now it's starting to round out. The stock market could do a double top before coming all the way down like Bitcoin did. Bitcoin, on the other hand, might be ahead of the stock market in that sense, in that it's already put in this macro topping formation. But at the same time, it's going to follow the stock market in the sense that if the stock market has a second drive to the upside, Bitcoin's probably just going to have a mid-cycle rally, okay? And that could be really pathetic. It could be 20,000, it could be 25,000, it could be 30,000, it could be if you're on the wishful thinking side, it could be 40,000 or even 50,000, depending on how the stock market goes, depending on what type of good news we get next year, which could be the end of the war in Russia, or it could be, I don't know. It could be something, okay? Like you always have to be open-minded to those things. Obviously, we don't have that picture very clear yet, and everything is leaning bearish because there's a big chance for a global recession. And so, more likely is the case that we're just going to be suppressed down here, and eventually we'll find our way back up. But given this formation, I do just consider that we're likely to have some type of a pump, and then we're likely to have a dump, and then again, maybe a breakout. And who knows, it could be really lackluster breakout and maybe even double bottom before we ultimately put in the bottom structure here. Probably before the stock market, in my opinion. I could be wrong about that, but I do think that the stock market has a lot of work to still do to get completely reset. Whereas Bitcoin and crypto, most of the charts look almost fully reset, and it's just at what point does the market find them to have value, and at what point do these regulations stop freaking people out? Okay, so that stuff can go on for a while. It could go on for another 6 months. It could go on for another year. But at some point, people are just going to bite the bullet and say, hey, I think this thing's always squeezed out. Okay. So I do expect sometime between, spring and summer that buyers will start to step back in, assuming nothing super catastrophic happening in the market. And, I could end up eating my hat on that. Maybe I'm wrong. This is just a very loose kind of projection with no real data behind it, which we'll have to find out, in quarter one, what the situation looks like. I totally reserve the right to reassess once we have recession data starting to come in quarter one 2023. But I do think that this is a pretty interesting formation. And we also have, a larger structure that's being put in here on the macro, which has a very similar kind of look to it. And I personally don't like this one. Crown Crypto is pointing out that one. I much prefer this smaller local one as indicative of a possible local bottom at least. But Crown and some of these other guys are pointing out this macro one. I'm not fully convinced about that, and it's just because these type of formations, they can also take a really long time to reset. That's a lot of price action over several years, and so that could take several years to play out, and I'm just not ready to think in those terms yet. But since we're talking about half a year here, at most, even less than half a year, I think we can make some projections just based upon this local pattern. And that's what I'm willing to consider at this point. We do have to see how we're going to break up on this formation. And since we are right at that midline, you can see it's very easy for us to get rejected right there around 17,200, which is the projection of where I thought we could get a measured move to. And then we could just easily break down to 15,000 and then try again for the top, or even break out, once if we do touch the bottom. So we do have to watch what's going on with this local pattern, I believe. And let's see here. Yeah, what I wanted to point out is that this midline is very important. It does come all the way back to this area, and you can see that we have gotten just huge rejections off of it, right? We've gotten, kind of capitulatory moments off of that. You can see we've also had really nice bounces off of it, really nice bounces off of it, really nice bounces off of it. And we also had this major run right here where we did do 40% on Bitcoin, which is considered that is considered a bull run. Now it's not a bull market. The whole market didn't change or anything, but we did get a very nice run off of that. So again, guys, like breaking through this midline, isn't a small deal. And if you just think about it in bigger time periods, right? Like just think about this one. We had one bottom, kind of two bottoms, three bottoms, four bottoms right there. And we have this, one, two, three. How many bottoms can we bottom underneath this thing before we get a nice pump off of it, right? Something like this, or even something like this. I would expect, it's coming up. Like if you've been sticking around in this market, I think, that it's coming up. And yeah, we might not get something like this, but could we do one of these smaller ones? Maybe. I think so. So let's try to look forward to something in 2023 as we end 2022, which just has been a disgusting market. And understand that this midline that we are exploring in this technical wedge here, which does have a 70% chance of eventually breaking to the upside, does give me hope that in the next few months, that within probably quarter one, before April probably, or no later than the middle of the year there, that we could get some pretty interesting action coming off of this wedge. Okay, so just my hypothesis. Okay, the market can make fools of everyone, and sometimes it lures you into traps. This could end up just flatlining for a while and then doing its measured move, right? And the measured move should be the height of the triangle, so that would suggest at least, if we end up getting to the apex of this triangle, then at least to 20,000. And, if we break out before then maybe 25. And we could also have continuation upwards, right? It doesn't have to stop. That's simply the measured move that we would consider. Let's move forward and just let's take off this wedge. Let's take off the support and resistance just to get a little bit of a cleaner chart there. Take off the CME gaps. And let's go ahead and put on some structure here just so we can look at what our local structure is looking like. And for that, I am going to go to the 4-hour and I'm going to zoom in a bit. See if Bitcoin will load. You can see that we do have a bit of this support area over here, which we did flip into resistance. Back here, we did have some price action, which apparently it's not loading on Bitcoin, or on TradingView. So let's just go ahead and take a look at the chart over here. And then we do have some support down here. So if you just wanted to eyeball these things, you can say this is the middle of the chart, this is the top of the chart, and this is the bottom of the chart in terms of our just local price action in terms of horizontals. And, so what does that immediately tell you? It tells you we're in the middle of the chart. Do you need to be trading the middle of the chart? No, you do not need to be trading the middle of the chart. And you can even kind of just eyeball the super middle, right? Just put a little dotted line there. And you can see it falls almost directly halfway between the top and the bottom, which of course the 50% on any fib move tends to be a little tends to be a significant area. So if we do this, you can see that's the 50%. It's also the golden pocket. We were looking for that for a possible bullish bounce. We did get that bullish bounce. And so I'm hoping that we can continue this bullishness to the top side. However, since we did break down here, we basically explored this top here, we explored the bottom here, we explored the top here. It wouldn't surprise me if we do end up breaking down and just exploring the bottom. And what we wouldn't want to do is get trapped under that middle and just breaking down, right? That could be quite scary. Uh, and if you're bullish, you want to see us getting on top of this middle area and then coming up here, into this $18,200 area to perhaps try this area once again and see if we can take some profits in that area. However, again, guys, you'll remember that the Alpha Fam got in right down here. We looked at some microstructures, we got in on that, and then we saw just a medium time frame structure right here. We got in on that. We got this measured move all the way up to here. You can see this measurement that we had drawn out. And so we did claim this Pico bottom. We also got in here, and this one was even higher conviction than this one. I was a little bit of a nervous Nelly on here, and I waited for additional confirmation, which is totally fine. That's what you should be doing. But we did get the bottom of this move. That was a nice double bottom. And so we were able to ride this out to the top. You can see that we did have an inverse head and shoulders that we were looking at. That measured move did play out, and we even got a little bit more up here, which was the hypothetical liquidity that we wanted to grab in some of these previous episodes. So overall, the Alpha Fam is just killing it. And I just wanted to remind you guys, we are in the middle of the range, okay? So, you know, in my view, you should be buying at support and then selling at resistance, right? Uh, you don't really need to be taking these moves in the middle of the chart unless there's a very obvious formation, which this was kind of bull flaggy. This was an inverted head and shoulders with a measured move to the upside. And then there was also, you can't see it, but there was also a little kind of just kind of a proto cup and handle right there, which did suggest that all of this wanted to pop up. It was a very bullish structure going on here. And so that was actually a great one to take. In terms of this one, mm, you know, it looks okay because we are getting this rising price action where we do see just low, higher low, higher low, higher low, and potentially again we're making another higher low here on these just really short time frames. And you know, let's look at the candle bodies. It's holding flat. And so this could be considered some type of an accumulation wedge, which would suggest a possible breakout to that 17,200 level. Now, what was the significance of that 17,200 level? First of all, I projected it several episodes ago based upon this overall bull flag. So we still haven't had the full measured move of the bull flag that we had back here. But additionally, if we consider the wedge formation, look at that. That's right. That's right in that area for that midline for our our local macro wedge here. And so getting on top of that midline and grabbing that area would suggest we could possibly have continuation up to this resistance. And that resistance, is going to eventually, block us around 19,000 to 18,000. So you would most likely want to take profit there unless we can prove that we can break out of that, because more than likely would just be falling to the downside, sort of like this, right? Like you just tapped it and then you just totally capitulated. That could happen again where we pop up and then we just completely capitulate down to 15,000, 14,500, something like this, or just retest the lows or the mid line here, something like that, and freak people out. So this is what I'm looking at. And again, you don't have to trade the middle of the chart. If you weren't able to get this this double bottom with the alpha fam over here, then and if you didn't take your profit at the midline of this wedge, then I don't know what to say. The middle of the chart, it's not clear if it's going to go up or down, but at the bottom of support here, it's going to go up, at resistance over here, it's more than likely going to get rejected. And if it breaks out, it still has to retest. So you have plenty of time to get out usually, right? Usually. Sometimes they just blow through it, but usually you do, right? They and that's a lot of resistance to get through, okay? Like that's a lot of overhead that we would need to break through in order to get up there. So it's not likely that we're just going to just go straight up, and through all of this. Yes, we dropped down through it, but it's not that likely that we're just going to go straight up, right? We'll probably have to fight to claim that level. And so just some things to think about. Let's see, what else can we look at here? I do have the momentum pools, the alpha momentum pool set up here for you. We can see that this. Sorry about that. We can see that this diagonal that we're climbing up here will also provide some type of support for us. So if we do end up losing that 16,750, you should probably be pretty wary that we're going to retest the lows of this area somewhere down around 16,300-ish, if not perhaps even lower to the 15,000-ish area, because this is our support right now. This is our diagonal support, and if we lose that, we're probably just going to Bart Simpson to the downside. And so this is Bart's head, right? We're going to Bart Simpson to the downside and find our way back at the lows. But if we do hold that support, then you can see it does correspond to my momentum pools. And the alpha momentum pools are pretty cool because usually when we get on top of the momentum pool coming from an uptrend, that does suggest intense momentum to the upside, and you can usually consider some type of a pop. Now that pop, would take us likely to that 17,100, $17,200 area, and if we can flip that into support, then we could potentially see a run even higher. But I would just be very humble and consider 17,100, 17,200, maybe 17,300. We do have a lot of liquidity up here to potentially grab as the area that we'd like to take profit in. And if we're able to get higher and get up into that $18,000 area, then that would be at the top of our channel up here. And so definitely if we come into that $18,000 area, it would be a great place to take profit, in my opinion. Or at least that's just how I would plan a trade. On the other hand, if we do lose this diagonal support, then that would suggest a nice, potential for a short all the way down to 16,300, and then potentially a short down to that $15,500-ish area. You can see that does line up with the 2-day momentum pool, that projection, which would have an exact number of 16,773. So if we do lose 16,773, by the end of the next 2-day closure, then I do suspect that we will be continuing to the downside. However, both the daily and the 2-day do have a top of their momentum pools at 16,918, where I've done analysis of just 4 different types of momentum over 5 different time periods, where I can say that if we are able to hold above this level of that 16,918, then there is a good chance that we could pump up at least to at least up to that 17,000, maybe 200-ish area. Guys, I can put a little bit more to this. Let me go ahead and take off that structure. And let's just go ahead and get some of these alpha momentum scales up here just to give you a little bit more of an insight of what I'm looking at. And if we do have it on the 4-hour, well, we did just have a new 4-hour close. So the 4-hour neutral may have been lost. Yep, we are underneath that 4-hour neutral. And so we are going to be looking for the 12-hour neutral area and also this area of significance. Oh, hey, look at that. While I've been making this video, we did bounce off of that area of significance. And that is a very important level to keep in mind. If we do lose that area of significance, I am going to be more bearish than just these 4-hour and 12-hour neutral levels being underneath those. Okay, I will consider that we're potentially losing our momentum pools. Let's see, let's put that structure on there. Yeah, that is slightly under the daily momentum pool, and it is towards the bottom of the 2-day momentum pool. And so again, if we lose 16,836, that's probably front runnable to the downside. However, I don't really formally become bearish until 16,773. Underneath that level, I would say that we're probably slipping to a 16,720, and underneath 16,720, again, if we put that structure back on, we have lost this support. We've lost this lower wick down here, likely to just grab this liquidity and bounce back up if it's just kind of a wicking kind of thing. Or we could even find our way all the way back to the range lows. So these are really the shorting levels for me, 16,773, and then more comfortably 16,720 on a daily basis, and potentially the 2-day also. So it could take another extra day, right? Just how slow price action has been. On the flip side, in terms of bullishness, you can see the majority of our price action does end up here above this kind of midline that I did put that dotted line there. And that does correspond with our estimated 4-hour neutral and our estimated 12-hour neutral. We did lose the 4-hour, but that line could still be significant in terms of flipping it. So if we do flip these neutral levels, 16,886 especially, then we're likely to push back up to the top of this kind of mini range that we have here, 16,918. And then being on top of 16,918 is what I've already mentioned. I will be formally bullish, and that bullishness could take us up to 17,172. And if we do flip on top of 17,172 with some 4-hour candles, or some type of significant price action, then that could take us into that $18,000 region. And we will be really limited, most likely, by that $19,600 level. There's just a lot of resistance up here. You can see where there's a lot of resistance at that $18,400 area. And so I don't become macro bullish unless we get above 19,600. And I really don't get macro bearish unless we're underneath 15,300, where we really significantly lose the support. Yeah, we could do a flash wick and freak people out, just like we made a little bit of a lower low right there on that wick, but we ended up coming higher. We could flash down, get a little bit lower, and then pop back up, right? But if we lose 15,308, it's just for me personally, I'm going to be quite wary. And again, on a structural basis, I'd like to see us hold above 15,785. We've had a pop up, multiple times when we're above 15,785. So just something I would like to see before going long is to hold the top of that area. And that's pretty much what I've got for the alpha momentum scales there. Again, guys, these are calculated using 4 types of momentum over 5 different time periods. And then I select the most significant ones and I try to match it up with the EMAs. So let's go ahead and just throw on some simple EMAs to see what we look like right now. And on the 4 hour, yeah, you can see that we did lose that estimated 4 hour neutral. And so we are just squeezing to the downside right now. Not a good look. Hopefully we can catch ourselves on that area of significance and then perhaps do a little bit of a turnaround. But again, if we explore some of these levels down here, it's not a big deal. It's just we need to get back up as soon as possible. That's all, right? And so again, like 16,720 is the real concern level for me. As far as the 12-hour, let's take a look at this one. And you can see that we are below the estimated 12-hour, but we do have 4 hours left in the 12-hour. So that thing could pop back up. And if we do get above 16,868, there's a good chance that we could pop to the upside in some type of surprise move. So again, like, this isn't over yet. On the 12-hour, we're still above the 9 EMA. So, yeah, this looks like it does want to squeeze down, but you see a lot of just crazy wicks, right, on the 12-hour. So, we could get another crazy wick and still continue to the upside. And let's go to the daily. On the daily, this does look much better. We do have a squeeze play here. I am going to need to put on my advanced EMAs for this one. Yeah, and glad I did because we can see that we do have the 10 simple moving average right here, which I do keep quite faint, but we do have it right there, which could provide some additional support somewhere in that bearish-ish level. Okay, just kind of tapping that, bouncing back up, sort of like what we did here, maybe even poking through it. Could give just a little bit of a tap and then bounce back up. But the thing that I don't like is that the 4 is overhead. We do prefer, the 9s to be above the 4s. And right now, this 9 simple moving average is underneath the 4. And that's not a bullish cross. That's a kind of a bearish cross. So there could be a good chance that this ends up squeezing to the downside and maybe catching itself down here or just losing it and exploring the bottom of the range. Again, we do want to be above this area of significance. Um, where we can see a lot of the price action is holding here. And we definitely want to be above these neutral levels just before we take any plays to the upside. And personally, I wouldn't take a play to the upside unless we're above that 16,918, which you can see does correspond pretty closely to the 21 EMA on the daily here. Let's go to the 2-day because the 2-day does close within a day and 16 hours. And so, again, yeah, that's the same level to be above the 9 EMA. So holding above that 16,918 would be significant. That's how we're going to find our way up to this 17,172. And hey, look at that. That level, again, this was calculated using momentum, but this is an EMA. Um, it does correspond to the 21 EMA on the 2-day. So all of this is lining up quite well. We are losing a bit of the bullish structure that we had put in on the 4-hour, on the 12-hour, and on the daily. So as of this video, we are leaning slightly bearish underneath these neutral levels. But again, we haven't broken that area of significance yet. And so just going to give it a fair chance to kind of play out. Let's go ahead and take a look at our volatility. You can see the volatility is on the floor for the 2-day. And so whichever way this thing is leaning will probably end up determining how it explodes, whether it explodes to the upside or explodes to the downside. The 2-day is very ready to go. And so this thing is just, it's like revving up, right? It's revving up its engine and it really wants to pop in a direction. Let's take a look at the daily. We did end up closing that crazy bearish, or not crazy bearish, but crazy just well, it was bearish, and then you can see that we are expanding to the upside here. That move isn't over yet, but we have basically nearly touched the bottom, and so probably this move is coming to a close. Whatever has been propelling us up in this area right here during that Christmas time, which by the way, it's just been like $100, $200, whatever's been propelling us up, it's probably coming to a close. And let's see, when did that? Yeah, right here, popping us up these last couple days, okay? And, from back here, we were just kind of consolidating to the downside, and now we're, well, I guess we were expanding to the downside, and now we're consolidating to the upside, and that move is coming to a finish. So probably the 2-day is going to take over, or another 4-hour. Let's see how our 4-hour volatility. Yeah, our 4-hour volatility continues to expand from this really low level over here, and it is expanding price action to the upside. So as long as this 4-hour momentum, or pardon me, this 4-hour volatility, as long as it keeps open and doesn't pinch shut, we do have a chance of continuing to the upside. Now, that is a very weird looking formation. I don't usually see it like this, but this isn't, again, this doesn't look done yet. So, and it is just in a baby area, so it has a lot of ways to go to the upside if this wants to continue bullish. Now, it could just flip around and, reset. So the 4-hour, we just have to give it the benefit of the doubt. Let's see if the 12-hour says anything more interesting. No, the 12-hour is just flooring. So the 12-hour is going to be a follower. The 2-day is going to be a follower, and right now the 4-hour is doing its thing, and the daily is just closing off. Okay, it's probably working with the 4-hour, to be honest, but I don't know. This price action has been just so sideways. Um, it's hard to say what is exactly is going to happen. What I do like is that we do have a little bit of a squeeze play going on here, and that price is fighting to try to be above the 9 here. And if it does hold on to that 9 on the daily, you can see we're rising as we speak. If we do hold on to the 9 and the 4 here, then we are going to continue to squeeze. And, although this 21 is pointed a bit down, which isn't really what you want to see. You want to see it flat or pointing up. That does give us a chance to continue to work to the upside. So definitely going to give that a chance to continue to play out. And I'm not going to be taking any shorts or any longs here unless we get to my obvious levels of bullish above 16,918 and a bearish under 16,773 with some bias, I think, underneath 16,836, kind of flipping bearish there. Above 16,836, I am just going to give the benefit of the doubt to the upside, and but I just won't be taking any type of play. Let's see here. We do have we've gotten price action, we've gotten momentum, we've gotten volatility. We took a look at the EMAs. We definitely took a look at our different levels here. And I think that's going to be it. I am going to wrap this one up. Guys, again, I hope you had a great Christmas, and I hope you're having just really joyous plans for the new year. So, yeah, that was your alpha for the day. Stay safe and happy trading.